Three things to touch on quickly in this monthly update: Fed policy, tech regulation, and a couple of Analyst Day recaps. First, on Fed policy, growth stocks have made a resurgence the last few weeks, the catalyst really being the FOMC meeting in mid-June. The Fed did bring forward their rate hike projections modestly, with the first hike now expected in 2023 instead of 2024. This explains the 10-year surge on the initial press release, circled here in white, but since then, commentary from Powell and other Fed officials has made it clear that the Fed does not intend to raise rates preemptively, despite near-term inflation, and the Fed remains firmly in the transitory inflation camp. Reaction from markets, both bond and stock markets, indicate to us that the market is aligning itself with the Fed view. There are good reasons inflation will prove transitory. So base effects will be temporary by definition, supply chain bottlenecks will eventually normalize, and lastly, productivity growth resulting from the accelerated business investment in technology over the past year. And productivity growth will serve as an offset to higher wages, keeping unit labor costs contained. Here you can see the Fed's forecast for core PCE settling in at about 2% in 2023. However, we think investors need to appreciate how dynamic the economy is right now. CPI hit 5% in May. Unprecedented stimulus has driven debt to GDP to 127%. Labor markets are tight, housing prices rising rapidly. So even if not the bull case, investors should still acknowledge the tail risk of inflation being higher for longer, forcing a rate hike sooner than expected. And yes, that would weigh on long duration assets. That doesn't mean growth investors should abandon all long duration assets, but it is a time to emphasize bottoms up fundamentals. So we remain invested in a select group of long duration names where we have conviction that long-term fundamentals can overpower potential pressure from higher rates. And we elaborate on the inflation outlook in our quarterly letter, which will be published shortly. On the regulatory front, the House Judiciary Committee has advanced a series of 5 bills as part of their anti-monopoly agenda. We won't detail each, but just as an example, platforms would no longer be able to use data from the sale of third-party products to inform their own product improvements. Obviously, that's relevant for Amazon. And platforms wouldn't be able to favor their own services. So think of Google surfacing Google Maps as the default map for every location query. In short, we think the more drastic of these bills are unlikely to pass. They would require 60 votes in the Senate, and ultimately, we think successful antitrust enforcement is going to require rewriting the law from the framework we have today, the Consumer Welfare Standard, to something more similar to what exists in the EU, which is focused on promoting competition. Now, longer term, regulation is going to be a recurring theme. The appointment of Lina Khan as FTC chair is pretty notable. Khan, just 32 years old, published an antitrust paper while at Yale Law School that quickly became required reading for all tech investors. So this is an area that will bear watching. Now, just to highlight a couple stocks, ZoomInfo hosted their Analyst Day a couple of weeks ago. This business is transforming from what used to be just a data layer to a full stack data and application layer. Management also put out new guidance for 2025 revenue of $2 billion, implying about a 33% revenue CAGR. We think this is a unique data asset with low market penetration, new product optionality, a favorable competitive environment, and 45% free cash flow margins. And then Snowflake also hosted their Analyst Day in June. Management laid out a path to $10 billion plus in revenue by calendar 2028. Snowflake has the potential to be one of the fastest enterprise software businesses to reach 10 billion. But to us, the most important part of the story is the traction with their data cloud strategy. So here you can see how their data sharing network effect has accelerated over the past year. And this is key to Snowflake, not just meeting and exceeding revenue targets, but building a durable moat. Finally, things to watch in July, several notable IPOs in the queue, DiDi in ride sharing, SentinelOne in endpoint security. And then we're going to kick off earnings season in just a few weeks, and we will be looking for third quarter guidance, which will reveal even more about the sustainability of some of these digital trends as we lap COVID-19.
Investors should carefully consider the investment objectives, risk, charges, and expenses of the fund before investing. The prospectus, which contains more complete information about this and other matters, should be read carefully before investing. To obtain a prospectus, please call 1-800-Gabelli or visit www.gabelli.com.